Yes, I believe the audio was not okay with YouTube. So let's restart. Let's rewind a minute. We are here to talk about labor code shift and not the compliances emerging under new labor code. And we will be discussing about the challenges which employers will face in restructuring the salary, and we will be dealing with few burning questions, whether there will be impact on net in hand salary, whether there will be any taxation impact. All those questions we will be dealing in today's webinar. So keep up for this 25 minutes, and I hope that it will be helpful for you in restructuring the salary in your organization. Let's begin. So we'll start with very basic topic which everyone is discussing. You, all of you might have heard about that wages or salary should be 50% or basic salary should be 50% of your gross. So it's not that. It's not that basic salary needs to be 50%. Let me break that out and let me explain what law really says and how employers would be able to gauge it, and employees as well, because they will have to calculate their PF contribution in coming months. Actually, it should have been already started from the month of November, from 21st November, but that's totally okay because uh, the final rules are yet to be rolled out, even if the courts have made effective. So, how these codes will be implemented, even if rules are not there, we'll also talk about that. So, let's go to the definition of wages. What you are able to see on the screen is not exactly the definition. It's just made for representation purposes and to make it simple for you to understand. For example, in exclusions, you'll be able to see the first item as statutory bonus. And in definition, it's altogether different. Statutory bonus, the definition is the statutory bonus, which is not included in the salary structure as part of your appointment letter. So please don't consider this screen as definition, but a tool for you to understand what really definition of wages. So wages means all remuneration, including basic pay, DA, retaining allowances, all remuneration, which is payable to employee. So first it talks about all the salary, all the remuneration which is being payable. And then there are 11 specific items which need to be excluded from the gross or the all remuneration part. So this is the list of those 11 items. First one is statutory bonus. Second one is value of house accommodation. Third one is PF and pension fund contribution by employer. Fourth one, conveyance, special expenses entailed on employee by nature of his employment. HRA, remuneration under award or settlement by court, overtime allowance, commission payable, gratuity, retrenchment compensation. So why all these 11 parameters are presented here? Because it has a significance that if these 11 parameters, out of 11, the first 9, please be mindful that while having made this proviso effective, we need to focus on first 9 for calculating the 50%. 50% is the right parameter which you might have heard in newspaper, which you might have read in newspaper, which you might have heard in news. But the real 50% is this first 9 parameters out of 11. If this first 9 is more than 50% of your gross, which is the total remuneration payable to employee, then the differential, if this first 9 is 60%, then the differential of 10% will be added to your salary in for the purpose of calculating wages. And why wages are important? For the purpose of calculating PF and gratuity. Okay. So why gratuity and retrenchment compensation or retirement benefits paid at termination of employment are not added here? Because that way the calculation of PF will go haywire in the final month of the employee in the final month of his service uh, at the time of leaving the organization. So that's why first nine only uh, to be considered for the purpose of calculating 50%. So let's revise it again. First, you need to include all the remuneration, all the salary payable to employees. Then you need to exclude 11 different parameters. But after eliminating all 11, you need to calculate whether the first nine is more than 50% of your gross. And if it is more than 50%, then the differential will be added to what your product was after subtracting the 11 components from the gross. So this is one complex formula, one complex definition which the department has given us. Now, what is the dilemma here? If you see, the third component is employer's contribution to provident fund and pension fund. Now, if you are saying that wages need to be calculated for calculating PF, and for calculating wages, PF is also there in the definition or in the calculation, then it's a circular loop because wages are dependent on PF, PF is dependent on wages. So in practicality, you will have to go through trial and errors while designing the salary structure under new labor code. So this trial and error is called as circular loop, which is inbuilt in the definition of wages. So if you sit and calculate the revised structure of your employees, then you'll come to know that this circular loop is there and you'll have to intervene it manually. And there will be two, three iteration, five iteration you have to run before settling down to a calculation. Why this circular loop is there? So whenever you hire some employee, you decide CTC, cost to company. You decide that parameter very first, that what will be the CTC. And after deciding that, you define components. For example, basic salary, HRA, conveyance allowance, motor car allowance, meal voucher, etc. etc. But you must note that to achieve that amount of CTC, you will have to make one component as balancing component. Then only you will be able to reach at that specific decided CTC. Otherwise, there will be trial and errors. And if that balancing figure is part of wages, and that will keep on changing based on the PF, and PF will change based on the balancing figure, that's where you will be stuck. And that's where my solution to this circular loop is that the balancing figure should be from the exclusions, the parameters which are excluded from the definition of wages. So I'll go to the previous screen again. Let's have the look at all 11 parameters which are excluded from the definition. So my solution, this is my solution, that the balancing figure in your CTC structure while setting up or restructuring any employee CTC should be from these excluded components only. Otherwise, you will be stuck in eternal loop. Okay. So that's why there is a circular loop, and that's where the solution is. Now, the most important question is why to restructure? Why restructuring is really required? So let's take an example where the CTC of an employee was 10 lakhs, and usually in industry it has been observed that the basic salary was or were to be 50% of the gross. Usually it may be 30%, there is no law around it that how much should be a basic salary out of CTC. There is no law around it. So it can be 30%, it can be 40%. What I have observed in my professional career is that people used to keep it at 50%. So I'll take that example only. Even if you take any other example, 30%, 60%, 40%, you'll end up with the same result. So let's take an example of 50% of basic salary. So out of 10 lakhs, 5 lakh is basic salary. And if you go to calculate monthly basic salary and PF based on that monthly basic salary and gratuity based on that monthly basic salary. Okay. So for calculation purpose, I'll say that the basic salary is 6 lakhs yearly. The monthly will be 50,000. And now on 50,000, if I have to calculate gratuity, so let's take let's consider that we'll end up with 4 lakh rupees of gratuity. Okay. Now the base of this gratuity calculation, which was the basic salary earlier in Gratuity Act, is changed to wages, from basic salary to wages. And we have seen what is the definition of wages. And whatever current salary structures are going on in the market, there are allowances included in the salary structure. So you'll end up with, while calculating wages, you'll end up with basic salary plus some allowances. So it will not be 50,000 now. It will be around 70,000 a month of wages. Whether you were getting those wages earlier, yes. But the calculation of gratuity and PF was based on basic salary earlier. Now it's wages. So from 50 to 70, we are jumping from 50 to 70 while shifting in new labor code. Now to calculate gratuity on 70,000 instead of 50, there will be a sudden spike. There will be a sudden spike in gratuity. There will be a sudden spike in PF as well. Obviously, there won't be any spike where PF has been capped at 15,000 of wages, which is 1800. Obviously, there won't be any spike because you used the capping mechanism of 15,000. Although there are news in market and government is contemplating that this 15,000 limit should be increased to 25,000, but it is not made effective yet. So now, where you were contributing PF at 12% of basic salary, you will have to contribute PF 12% of wages. So from 50% to 50,000 to 70,000. And hence there will be impact on net take home salary of the employees, which I don't think a lot of employees would like. And they might have already reached out to employers that uh, salary needs to be revised because there is impact in net take home salary. That's why there is need for restructuring where employers are feeling the need of revising their structure so that there will be minimum impact on net take home salary. There is one more impact we'll be talking in next slides where not just net take home salary is getting impacted. And one very important point, once you decide how you are going to restructure, from my experience, I would say that you'll have to create some tool around it which will trial and run automatically on its own, and it will give you the proper results in the definition of new labor codes. Because if you go manually for one by one employees, as your CTC is decided, we talked about the circular loop, there will be iteration and you will be stuck in that manual circular loop forever. That's why there is need that you should create a tool or hire someone who can. And then your salary structures can be redesigned and restructured, where employees will be happy that their net take home salary is not impacting that much. And employer will also be happy. Why we'll talk about in next slide. But while doing so, you'll have to keep in mind that you should inform your payroll service provider. Why is it so? Because the configuration of salary structure, the definitions under new labor code need to be configured in their payroll software, which you must be using. Obviously, they will define the PF contribution at or based on new labor code definition of wages. But for your salary structure to design and configure, They'll need your help. They'll need confirmation from you. They'll need initiation from you. So it's very imminent that you pre-inform your payroll service provider that we are in process of restructuring the salary, and you might be given tentative timeline and tentative structure for you to configure in payroll software. Let's go ahead. So reassessing the retiral benefits, like we talked, PF and gratuity. So, like we talked, PF will suddenly increase and employers will see a sudden drop in their net take home salary. Now, if the employer have not implemented labor code yet, they might in the month of March, and there will be arrears of PF which will be going to be contributed in the month of March, where arrears of 9 days of November, whole month of December, whole month of January will be there in your salary, which will be deducted from your salary, from employee's salary, and there will be sudden drop in net take home because of this factor. And obviously, again, at the cost of reiteration, we are not talking about the employees whose PF contribution is capped at 1800. We are not talking about that for this instance. Now, we talked about PF, that PF contribution will increase, gratuity will also increase. And for employees, it's a bit easy that gratuity will increase if they are leaving the organization. They'll have to take care that the employer is calculating gratuity as per new labor code based on wages and not based on basic salary. So the employees who have left their job after 21st of November, who were eligible for gratuity, might have to check their full and final settlement based on this. Now, for employers, it will be a blunder. It will be a Pandora box to open, where if they don't implement new labor code in the month of March, their statutory auditor will have a qualification in their audit report that why haven't you implemented new labor code? Why haven't you calculated your gratuity liability as per new labor code? For you to calculate gratuity as per new labor code, like we talked, from 50,000 to 70,000 for one employee. If you have employed 400, 500 odd employees, then there will be rise in 500 employees gratuity provision, which will be cumulative from the date of their joining. If someone has joined before 7 years, the impact of 7 years of this 50 to 70 will come in 25, 26 financial statements. That's why you could see the quarter three financials of a lot of IT companies going haywire, where their margins have suddenly dropped because of gratuity provision in their books of accounts in quarter three financials. So for employer, this is the impact of new labor code and definition of wages. So as it is a win-win situation for employees and employers to restructure the salary a bit to keep net in-hand salary of employees intact and gratuity liability at par, it will be very beneficial that the company should restructure their salary in the month of March and not in the month of April. Because if you do it in the month of April, there will be a sudden rise in the month of March in the liability of gratuity, and if you and sudden fall in the gratuity liability next year because you restructured your salary in the month of April. So that's why it's very important that you restructure the salary in the month of March. Let's go ahead. So this confusion is there that NPS will NPS be calculated on wages, or it will still be on basic salary. So NPS is not regulated by any of the acts which are subsumed in new labor code, and the basic salary was used for taxation benefits of NPS, and it will still continue to be same unless there are some changes in Income Tax Act, which is not there yet. So that's why NPS will be calculated on basic salary only. Let's go ahead. Nature and nomenclature. Why is this important that you use the specific or appropriate nomenclature to your salary components? If you remember that there was case in 2018 or 2016, in earlier era, I would say there was a component medical reimbursement where one used to get 15,000 of deduction under Income Tax Act. But there was a clarification by department. If you named it medical allowance, it will be fully taxable. If you named it medical reimbursement, then only 15,000 will be considered as deduction. So they played on nomenclature. But to my surprise, I found a case by ITAT where they used leave travel allowance as a factor for assessing their case and not leave travel concession. A lot of you might have seen or might have come across a salary structure or pay slips where leave travel allowance is mentioned and not leave travel concession. It should actually be concession and not allowance. Having said this, there is no specific law about it, and this is a commercial practice that leave travel allowance will be mentioned and not concession. But to avoid all this uh, confusion between allowances and reimbursement, one should keep in mind that nomenclature should be in line with the nature of the component. So that's a very small point as you will be in the process of restructuring in coming month. Again, there was one more confusion around fixed term employees. So there was a news that for gratuity, the 5 years criteria has been made to 1 year in new labor code. I hate to break this to you that this is not right. The 1 year condition was for fixed term employees, and fixed term employees are the only ones who are employed for fixed period of time specifically. You go to your appointment letter and see if there is specific period mentioned that you will be hired from or you will be employed from April 2026 to March 2027 only. If you can see that in your appointment letter, then you are a fixed term employee, and for you, the 1 year period will be applicable for eligibility of gratuity. Otherwise, there will be a limit of 5 years only, which was there earlier in the Gratuity Act as well. So, if you are a fixed term employee, only then 1 year period will be applicable. If you are not, then 5 year period will be applicable. Now, why employers need to consider draft income tax rules as well? In our email of this webinar, we have mentioned that there will be hint of income tax rules as well. You might have read news about increase in limits of some perquisites. For example, meal voucher. For example, motor car perquisite. For example, there are cities which are added to 50% criteria of HRA. Pune is one of them. So Pune, Hyderabad, Ahmedabad, and Bangalore are added to 50% criteria. Earlier they were in 40%. Mill voucher is increased from 50 to 200 per mill. So it's a big jump again. And there are changes in motor car perquisite as well, chauffeur allowance as well. But all these rules are in a draft stage. They were open for public comment till 22nd of February. They are yet to be finalized and final copies yet to be released. But they will be released on 1st April. If you wait till 1st April, then like we discussed, that it's very important that you restructure your salary in the month of March. And if you consider new income tax rules where some benefits have been increased and you need to switch or shift some components to that extent. For example, if employees employed in Pune were kept at 40% of HRA. Now they'll have to shift it to 50% so that employees will be able to gain the maximum benefit out of their salary structure. So you'll have to again restructure in the month of April. So my suggestion to all the employers that restructure in the month of March, keeping in mind the draft income tax rules, which are going to be finalized on 1st April. What will happen? The limits, I don't think the limits will be revised in final version. Even if they get revised in final version, there will not be a substantial change. And this is one point to mention, contract labor liability. Uh, it's the same which was there in PF Act earlier, in new labor code as well. It's the same that the final liability is of principal employer and not of the contractor. Final liability, I am saying. The primary liability is of the contractor, that contractor will contribute to PF, and principal employer will ensure that the PF is being contributed on behalf of the contract laborers. I just wanted to mention that because uh, I read somewhere that there is a big shift in contractor and principal employer relationship under new labor code. But I like to tell you that there is not much of a change in terms of PF contribution and social security benefits. One more topic, excluded employees. So before telling you what is excluded employees and why I have taken up this topic in this webinar, let me tell you that the PF Act is subsumed in new labor code and not the PF scheme. You may ask me what's the PF Act and what's the PF scheme? What is the difference? So Act was where the provisions were mentioned and scheme where rules were there for enforcing those provisions. So those rules are still in place, still applicable, unless they are inconsistent with new labor code. So laws from new labor code, rules from earlier schemes, for example, PF schemes, till up till the end of 1 year from now, from 21st of November. So there will be new rules, but until then, the PF scheme is applicable. So what are excluded employees? The employees for whom the salary is exceeding 15,000 were not under obligation to contribute in PF. So those are excluded employees. And this definition was under PF scheme, not in PF Act. And PF scheme is still applicable. And in new labor code, there is no definition of excluded employees. So should we really consider it right now as well? So I would say let's go to the intention of PF department, how they want to keep it. I don't know how many of you might have filed PF returns in last couple of months, where earlier in PF return there was a field where we have to mention excluded employees number. Now in revamped PF Chalan, there is no such field of excluded employees. So what I am estimating that the excluded employee definition won't be there in new labor code and new rules. But till that time, we need to be very mindful of the PF contribution for excluded employees, how to go about it. So to summarize this webinar, this is the last slide, and to summarize, I'll say run your simulation on your current salary structure, whether you comply with 50% wage rule, and impact of it on PF and gratuity, specifically on PF and gratuity. You might want to go back to your actuary for interim valuation of gratuity liability based on new labor code, so you get an idea how much there is increase in gratuity liability, which will be shown in your financial statement. And to minimize impact on net in hand salary and gratuity liability, you must realign your salary structure with new labor code, so for you to have the same level of gratuity and PF contribution. Get it configured in payroll software with the help of your payroll service provider, and communicate this change to employees very clearly, because I would say employee or workforce is heart of the organization, and if they are not okay, your organization won't be okay. Keep them happy, and thank you so much for the opportunity. So if you have any question, you can write to us on this email ID, or you can call us on this number. Any query, we will be very happy to answer the queries. Whether it be a practical challenge, whether it be a compliance, anything related to new labor code, we'll be very happy. Thank you so much for patient hearing, and good day to you all.